All right. Hello. Good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because today we're going to take you who is where? Am I with somebody? I'm going to take you on a little bit of a journey through the balance sheet. The last video we did a video on the income statement, and it makes me sad because we only got 100 views, but a 10% like rate. So if you guys do enjoy this video, let's help reach a little bit more people. And please give this video a like if you guys do enjoy, and subscribe to the channel as we're up to 8,537 subscribers. Just got to put that in there. Thank you very much. Today we're talking about the balance sheet, and we're once again going over a stock that I'm purchasing, which is Udemy, actually up 10% today because they announced that they're going to be doing some share buybacks. So I'm in a fortunate position where I just bought a little bit of this stock, and that is very awesome news to see. So what we're going to do today, getting aside from that, is we're going to look at Udemy's balance sheet. I'm going to go over some trends that I like to see. We're also going to go over some definitions of terms that I am actually just learning for the first time as well, but I'm going to help break it down. We're going to break it down together. So I think it's going to be very exciting. And I'm going to basically tell you everything about the balance sheet, what I look for. Let's get right into it. So Udemy. Udemy is, first of all, a $1 billion company. What is this company? Let me go back and check, because it's important that when you're analyzing a company's financials, you understand, okay, how is the market cap tied to, let's say, the income statement, the balance sheet, or the statement of cash flow. So it's currently now, because of this 10% update, a $1.1 billion company. It's not a huge company. It's not a very small company. It is a smaller company when looking at large market cap companies. A $1.1 billion company. So let's see if their balance sheet reflects that. Well, one thing that is what we do not like to see is their total assets are trending downwards, starting in 2021 at 740 million, now trending down to 605 million. The one thing that I do like is on a quarterly time frame, because we have annual and we have quarterly, that their total assets have been increasing and their total liabilities have slowly been decreasing, which is what we like to see, which leads me into the next. Total assets we like to see increasing. Total liabilities, it's not feasible to say that total liabilities should be decreasing, because as a company grows, they're likely going to bring on more debt and more financing, so, and potentially more payroll, more people. So they're likely to incur more debt as they go along. But what would really be ideal is that we see the total assets growing at a much faster rate than the total liabilities. This tells us that the money that the company is spending is effectively being put to work, and it's bringing back more than you are paying for it, which is great to see. So total liabilities, we could dive into a lot about this. Current liabilities, I'm going to dive into current liabilities first. Current liabilities are a company's short-term financial obligation that are due and expected to be paid within 1 year of a company's operating cycle, whichever is longer. So a year, or a company's 1 year operating. So if my screen, we can just full screen this. Awesome. We go to current liabilities. These are the liabilities that will be due within one total year. And this could be things, as I mentioned, could be payroll, could be administrative, could be just costs of leasing, renting, anything like that. Anything in terms of running the business, maybe running programs, cost for electricity, everything. So pardon my phone going off in the background. I work, and this is my second one, which I do love, so it's okay. But current liabilities, this is anything to be paid back within 1 year. They're really their expenses. As we kind of dive in deeper here, you can see here we have payables, we have current accrued expenses, you have pension and post-retirement. So everything kind of plays into that. I'm not going to go too deep into that because really I look at really the main and the basics, the meat and the beans, which are the total assets, the total liabilities, and the total debt. So just to kind of bug out some terms, total equity gross minority interest. I think we can pop it up right here. A total equity gross minority interest. Yes. What is that exactly? Because that is a pretty big statement here. If we go here, maybe it is not here. Okay. A minority interest is a separate line within the item, within the equity section that represents a portion of, basically, portion of subsidies net assets not owned by the parent, reflecting the external shareholders' stake. So I'm learning some of these for the first time as well, but if we could pop up back here, basically, my understanding of this total equity gross minority interest is the stockholders' interest or equity within the company. This is taking out the insider's portion, the insider stockholders holdings, and taking what is open to the public market. So currently, their total gross equity is roughly about $200 million. Same as the total capitalization. As we work down, I don't necessarily have too many things that I look for on the balance sheet, but the main one is total debt. Total debt represents long-term debt. So in terms of Udemy, they are in a fantastic position, in my opinion, because their total long-term debt is very low at $10 million, and this will be covered by their cash flows. I'm not sure about their net income, but their cash flows due to operations were about $50 million. This more than covers their total debt. And when we do the cash flow section tomorrow, then we'll see how much cash they have, which I'm sure it is more than 10 million. So the main things that I'm looking at to go over and just do a summary of the balance sheet are the total assets. I really like to see this growing. This shows that the business is growing and becoming a bigger company. Total liabilities, I like to see not growing as fast as total assets. It's okay if the liabilities are growing, but not if they're overpowering or greater than total assets. That's a big red flag. Next, the real thing that I like to see, you could look for current liabilities, which tells you, okay, how much the company is spending on a year basis in order to run the company. But the main thing that I look for is total debt. You want to make sure that the company doesn't have extreme amounts of debt that are, let's say, anything more than 5 times total cash flows. I start to get a little bit weary, but you'll see companies with huge amounts of debt. Fortunately, Udemy is not one of those, and so they're able to cover that with their cash flows, and they really do have a good business model, and that's why I attribute their low debt. Of course, all balance sheets are going to be different. If you invest in a REIT, then total debt is going to be high. So it's very important to understand the underlying business that you're investing in and kind of manage. Do you think that this debt is appropriate? If we were to buy the entire business, do you want to be holding onto this debt? Do you think they'll be able to pay it off with the cash flows that they're currently getting? I think that's an important question to ask yourself when you're buying these companies. So this was a full overview on the balance sheet and how I like to analyze it. If you guys did enjoy, we're popping up to my home screen here and to my recording. And I just want to say thank you very much for sticking around. If you guys did enjoy, we're up to 8,537 subscribers. Please do like this video if you guys did enjoy so we could push it to more people. I hope this kind of gave you a little perspective on the balance sheet and what I'm looking for as I analyze all the companies. I really hope you guys enjoyed this video, and please do stay tuned until next time.